Meantime, for more on all of this, let's welcome ranking member of the House Budget Committee, Congressman Jason Smith, and Macro Trends Advisors founding partner, Mitch Roschelle. Great to be with you both tonight, gentlemen. Thanks for coming on the program. Congressman, I want to start with you first. Get your reaction to President Biden essentially denying that the U.S. is in recession. I mean, all week they've been trying to rewrite the definition. And in a statement earlier today, I'd also like to highlight the fact that they'd like to call this a transition period. Your thoughts?
Jackie, the Biden administration and Washington Democrats need to wake up to reality. Every American understands what the economy is like right now. And for the last 75 years, anytime the real GDP has decreased 2 consistent quarters, we're in a recession. And real wages amongst Americans have dropped 5.1% since Joe Biden took the oath of office. Guess what? In his first 18 months as president, every month, wages have dropped. And guess what? The 105 months prior to him being in the White House, 102 out of those 105 months, real wages have gone up. Inflation is up 13.8% because of Joe Biden's reckless spending policies. We are in a recession. I hope that he'll wake up. He also said that inflation was only transitory.
Yeah.
It's not. So clearly they need to wake up and see reality.
Well, Janet Yellen called it transitory, Mitch, and then she apologized and did a mea culpa, said she was wrong. But now she's denying that the U.S. is currently in a recession as well. This is sort of the administration playbook, if you will. But the markets have seen this for quite some time. Obviously, we've seen the markets drop. We've seen investors a little skittish about investing in the market. The bond market has been forecasting it as well. And then you get this second GDP report, second quarter of negative, or contraction, if you will. And that's confirming what we already knew, which is that things are really hard out there. Gas prices are up, food prices are up, and people are really struggling, Mitch.
Yeah, and inflation's insidious. I mean, it really hurts the lowest wage earners the most. And if you look at the GDP report today, it really wasn't very encouraging because inventories fell, which dragged down a GDP, and exports, which was perhaps one of the shining lights there, with that very, very strong dollar that we had, I think exports are going to suffer down the road. I mean, this slowdown of the economy is not transitional. It's not transitory. It may be with us for a while. It may not be a deep recession, but I think it's going to be a sticky one. And bad policy, as Maria Bartiromo likes to say, leads to bad outcomes. And what did they do today? The same day of a bad GDP print, what did they do? They announced more spending. It's just, it boggles the mind.
And this is pretty miraculous, so I want to dig into it a little bit. We've got a soundbite from President Biden today. These were his closing remarks when he was addressing inflation, and he talks about some of this spending. Let's listen.
And this is powering the strongest rebound in American manufacturing in over 3 decades, creating 613,000 manufacturing jobs. Passing the CHIPS bill is going to put another $72 billion for incentives and tax credits to expand semiconductor production. And the Inflation Reduction Act will add another $370 billion in clean energy tax credits in reconciliation, including incentives to accelerate domestic production of solar panels, wind turbines, batteries, and critical materials processing. That doesn't sound like a recession to me.
Well, actually, Congressman, it sounds like a recession to a lot of different people when you start to break down the spending, right? The chip bill, he's basically giving these big semiconductor companies a ton of money to go invest and make chips in China. And with the Inflation Reduction Act, let's put this full screen up because we break it down here. We're talking about $739 billion in new taxes, $369 billion for energy and climate, and a mere $64 billion for the expansion of the Affordable Care Act that might help people the most out of all of this spending. But nonetheless, spending is spending. Spending's what got us here, correct?
Absolutely. Inflation was 1.7% in February of 2021. They passed the $2 trillion reckless spending bill that they said was to fight COVID, but less than 9% went towards COVID. The rest went towards projects like $783 million to checks to prisoners, or $1,400 stimulus checks to Japanese citizens living in Japan, or $2 million to plant trees in New York. That is why every American is paying more to put food on their table, clothes on their backs, and gasoline in their cars. Just because Washington Democrats Democrats name a bill, an Inflation Reduction Act does not mean that it will reduce inflation. Nowhere do you spend hundreds of billions of dollars, do you get yourself out of inflation and you tax yourself out of recession. It's ridiculous. I wish they would wake up to what's really going on and talk to real Americans instead of their woke liberal advisors.
Mitch, I want to come back to you on the economy overall. Right now, now we've confirmed this recession that we're in. Some people thought we were in it sooner, and many are forecasting a period essentially of stagflation, where we're going to see, continued high inflation. We're going to see low growth, but we're going to see the labor market continue. That's the one thing that the Democrats hang their hat on, is this labor market. It's low unemployment. It simply, to me, seems like it's a very low participation rate. It almost seems artificial, and that we're in for tough times ahead, because what I'm seeing from the tech companies, for example, and on Wall Street is a headline here and a headline there about layoffs and job cuts as things start to slow down. It doesn't happen overnight.
You know, we're also, Jackie, as you well know, in the middle of corporate earnings season for the second quarter. And, there's a press release that gets issued in the morning, and then there's a conference call at some point. And when you listen to the CEOs and the CFOs on that conference call, they all talk about controlling spending. And if you don't know what controlling spending means, that is a metaphor for we're going to cut heads.
Yeah.
So we're either going to cut the bottom 10% of the workforce in a company Jack Welch style, or we're going to do a hiring freeze, or we're going to freeze wages. All of those are bad, and it's inevitable that that's going to happen. And one last thing, you said labor participation rate. You're absolutely right. Last month's jobs report that the administration was jumping up and down about, 300,000 plus jobs, terrific. At the same time, 300,000 plus people left the workforce.
Right.
And that's why the unemployment rate is low, because people are leaving the workforce.
And I love this stat. For those who are still in the workforce, still looking for a job, they could have 2 jobs if they want them. That's what's going on right now. A lot to watch, a lot to follow. Really appreciate both of you coming on tonight and giving us your insight. Thank you.